Hello there, I'm John McLaughlin. Welcome to another episode of the Crossfire strategy on gold. We're going to be trading gold with USD, and this is a strategy that I've been testing over the last 58 days. For the purposes of YouTube, if you're watching this on YouTube, this is day 4. And we're yet to make any losses on this particular strategy. It's a really simple strategy. What I'm doing, I'm putting these sessions together Monday to Friday, so you can follow along. The playlist for these videos is just below in the description, so have a look at that. Get on the playlist, and if you like the content of this video or of this playlist, then drop me a like, and please subscribe to the channel. It really means a lot to be able to produce more content if people actually like what they're seeing. So if you can subscribe, then even better. Really good session today. Remember, the last session we had was Friday. We had some really big moves to the upside. So what's the market going to do today? Well, we're going to find out on the session. Good afternoon, everybody. It's John McLaughlin here, ready for another session on gold. It's Monday morning, or it's Monday afternoon. It's 12:51, and we're going to be going through another Crossfire strategy on gold. We'll just put my broken glasses on. Getting all this joke now. Right. Okay. So. Before we go into the charts, let me go and check the news. Okay, first lot of news, I'm going to check at Forex Factory. You can see there it's forexfactory.com/calendar. And what I do, I generally check the news on 2 resources, Forex Factory and MyFX Book. So with gold, we're looking at the US dollar. What are we on now? The 13th. And there's pretty much one US dollar news at 7 p.m. rather. So nothing on Forex Factory. The MyFX Book, all the ticked ones are the news that's passed. This is news coming up. So you can probably see why I use MyFX Book a bit more, because we've got actually news reported. 3 low impact news and 1 medium. That's coming up in 3 hours 7 minutes, so it doesn't really affect us anyway. So at the moment, it's we're okay for the news. So there's nothing in the news. Let's go to the charts. So you remember this was Friday. Remember that trade we had Friday, and it went all the way up hundreds of pips. In fact, it went up for the complete move on the upside. In fact, we'll go from above here just to make it a bit fairer. All right. 428 pips, and this is the 5-minute time frame, so we're looking at 5, 10, 15, 20, 25, 30, 55 minutes, 400 and odd pips. That's good. Anyway, so what's happened, we've had this move, we've had the weekend, and what we've got here is we've got a lot of imbalance. So remember on Friday I said that imbalance in the market is when you pay too much money out for your gas or electricity bill, and you need to get some money back, and that's what's happened. So these candles show me. So if we start from say here, so you can see this wick. It wicked all the way down on this candle, and it wicked all the way back up to here. Okay. So your imbalance, we're looking. In fact, let's start at the top, the obvious places. Okay, we're going to start this wick here, down to there. That's imbalance. So let me go and put, excuse me, extend those lines across. So this, from that wick there, down to there, that's also imbalance. Okay. And from this wick here down to this wick here. Okay, well, that's imbalance. So what has the market done? Well, it's taken out the first lot of imbalance, so that's corrected it. It started to correct this second lot of imbalance here, and then it's bounced off this line. So what is going to happen? Well, it's 12:54. We don't know actually what is going to happen, but possibly we can look at the markets and say, okay, during this session, we're probably the likelihood is it's going to go down and maybe correct this imbalance. Maybe, we don't know. We know it's got to at some point, but we don't know when. Okay. So what we're going to do is draw on the box, draw on the trend lines, and with this imbalance in mind, it's going to give us some extra additional visuals to see where the market may go. Remember what I said, that at any line or any zone, any line, the price is either going to bounce or break. So if I draw a line on the top of this imbalance, okay, so you can see that the price almost came down to the line. It kind of respected it. It wicked a bit through it. It broke through, but then retraced. So usually when you get a break, you get a retrace or retest of the area, and it's kind of bouncing around this area. So you can see how the body of the candle has respected that area. It's gone back up, back down, respected that area. So we're now at a point where we've got a resistance zone based on this imbalance. Now when we put our boxes on, I'm going to put the boxes on now. Are we going to break through that line, or is it going to bounce off and go up to the upside? We shall see. So we're going to put 1300, put it on a bit higher up. So if this is the first time of seeing this strategy, the strategy is performed between 1300 and 1500. That's 1 and 3 p.m. GMT UK time, and that's the open of the US market. So we trade between those 2 hours, and what we do, we put two trend lines on, and I'm going to show you how and where they go. So we put a trend line on at the top, so we put a green buy trend line, and we put a red sell trend line. So at 1 o'clock, you'll see, let me see if I can go in a bit more, I can see that better. At 1 o'clock, we'll start to see the start of the 1 o'clock candle, and then when it's finished painting on the 15-minute, then it'll move on to the next candle, and that's when we can then place our trend lines on the chart. So what I do, I place all the indicators on the 15-minute, and then I take my trade ideas or the opportunities from the 5-minute, because I've found it tends to be more accurate, and it also gives you provision to get in the trade. Okay, so that's what we'll do. We'll just wait until 13:15. We'll come back. It's currently now 12:57, and like I said, what we're probably going to be looking at during today's trading is the price maybe bouncing around that line, and at some point between the start and the end of this session, 1 and 3 p.m, it's going to move down to the downside. But it's trading. We can try and predict what we can. We can try and be clever and predict it. And this is what I love, you know, with certain people that you look, not certain people, but certain videos you see on YouTube, and they go, look, it's going to go south, and they go, yeah, told you, what a good trader am I. And they'll do that a few times, and then you never see them again because they'll lose the majority of the trades. I know it might sound a bit harsh, but one of the things you've got to remember is that nobody can predict what is going to happen in the market. You can only assume. You can only make an assumption of what may happen, potential, what may happen, what may not happen, and that's what trading's about. And I think when you start to get a strategy, and you start to get confident with a strategy, stay within the parameters of that strategy. As you can see now, look, it's starting to move down. Okay, so a lot of people get into trades, they get into trading, they become competent at what they do, and then they think they're indestructible, and they start making mistakes because they're going above the station. They're trying to predict too much into it, and you should never predict. Anyway, it is now 12:59. We'll come back at 13:15. At 13:15 we'll put the trend lines on, and we'll see how the markets go. They say 90% of all success in trading is psychology. If you've lost trades by chasing trades, over-leveraging or second-guessing your strategy, then you are acting from your emotional brain. The part of your brain called the monkey brain. It makes you act without thinking and then calls you names for losing. Access my brand new resource, Teaching the Monkey to Trade. This training is designed to improve consistency and results, teaching you proven NLP techniques. You'll also get access to an exclusive interview with trader and master NLP practitioner about learning 90% of what it takes to succeed. Get free access to the resource and interview by clicking the direct link in the description below. Okay, 1313, we're back on the charts. Now as you can see, this is a 1300 candle and it's gone up to this point here and it's then come back down to where it is now. And what we want to do with this trend line is we want to put the buy trend line on the higher high next to this candle. So this is wicked up to here. So the next highest wick is this wick here. Okay, this one there. So that's where we're going to put that one. So let's put the magnet tool on and we'll go over and put that on there. Now we don't know where this candle is going to end up because it's still painting, and the lower of this currently is where the price is right now, just there. So we need to put that on the lower low next to where this candle is. At the moment it's the next one, it's this one, okay, but it may pull down even further, in which case we'll have to go further along for the next low. So we've got about a minute left. And just to finish the green trend line, this needs to go on top of this wick. Okay, so just on top of that wick there. So between the higher high and the top of this price is where the green trend line goes. And we'll just wait and we'll see where price is going to stop at 13.15 before the next candle is repainted. There we go, 13.15, magnet tool goes on, the lowest point is the next candle, that's where it goes, and because there's no wick on the next one, on the 13.15 candle we put the trend line through the middle. Oh, that's it, so through the middle. So now what we're doing is, and also I'm going to put one of our indicators on called the Ninjacator, okay, and this gives us a bit more indication of where the price is going to go. It's going to let us know. So what we're waiting for now is we want price to move above the green line for the buy and we want price to go below the red line for the sell. And the areas that we want to be interested in is this nice clean air here. Okay, this is where we want to be, the clean air. This is where the clean air is, because here all you've got is you've got support and it then goes up. Remember, these lines, they are trend lines, but they also form support and resistance, as you'll see. So the price, if you've got these on the right place, then you'll find that these trend lines start, or the price starts to respect the trend lines, and when it does that, it then gives you more confidence that your strategy and your trend lines are in the right place, and you kind of have got a better indication of where price may well go. So what we want it to go above this line and below this line for a buy or a sell. And within this line here, within this zone here, okay, you've got support and resistance from both areas. So as the price pushes up, it's got support, but it's also got resistance here. So we want to avoid this and we want to avoid this, okay. Well, let's see where price goes. So we've put the indicators on the 15-minute. We're now going to move over to the 5-minute, and this is where we're going to take our alerts from. And what I'll do, I'll leave both charts up. As I said, what I thought may well happen is that I thought price may well come down to take out more of this imbalance. And again, on kind of first assessment of the charts, on first assessment of what's going on, that's my initial kind of reaction. And as you can see, it's starting to push down. So what we need now is so we've got the piece out at the top, so that's given us a nice push down. The stochastic goes up and down. This is in the extreme. So in the extreme, in the top, means it's been overbought and it may well push down for the sell, okay? And again, this is all about keeping balance in the markets. So at the moment, it's pushing downwards, but it's not quite into the extreme. So let's just see where this goes. Price is now below the trend line, so it's given us indication that it may well go further down. But what I'm waiting for, I'm waiting for this notification from this Ninja alert. Okay, this is bespoke software that we've had written, and once this comes in, then we'll probably look at taking the trade. In fact, that's already in there, so we may well consider looking at the trade. Got 50 seconds left on this time frame. This is looking quite good for a sell. So again, I want to wait until the next candle, see what happens on the next candle, and usually towards the end of a time frame, so we've got 18 seconds left. There we go. Okay, so we're currently in for the sell. Like I said, price looked like it was going to go down, and indeed that's what's happened. It's gone down, and now it's going back up again. One of the things to note as well is that the markets on a Monday are always a little bit more unpredictable because the markets are still warming up. And obviously you might look at this and you go, well, okay, the markets look pretty alive to me. But sometimes on a Monday, depending on what you're actually trading, it can be a little bit slow. So that's just something to bear in mind. So in terms of a stop loss, I always talk about the stop loss, and sometimes it's a bit of a contentious issue as to where you put your stop loss. But as you can see here, this is going to form, this trend line, this red trend line is going to form now a resistance zone for the price to go up. So putting your stop loss somewhere around this area here. So there you can see price has respected it kind of. In fact, the price has respected that line, and it's so just above this line would be a good area for your stop loss. And you take profit. It's up to you how much profit you take, but with this strategy we found the sweet spot for taking profits is 10 pips. Okay, so 10 pips is a good sweet spot. And some people talk about the risk to reward ratio. When you're in a longer trade, then what you want is a high risk to reward. When you're in a kind of a scalping trade like this, where you're in and out fairly quick, the back testing that we've been doing has given us we haven't produced any losses as yet. So the risk to reward, does it really matter? Well, you don't want to risk any more than 1%. Risk to reward, again, it's one of those issues that people always discuss. Your risk to reward was rubbish. You go, yeah, but we've won all our trades. So it depends on your level of management, but essentially don't risk any more than 1%, and the sweet spot is taking 10 pips. So look at the stochastic here. We've got the 5 and the 15 still, sorry, the 5 minute still coming down into the extreme. It's not quite into the extreme yet, so there's plenty of room for it to move. The PSAR is at the top, and there's plenty of volume here. There's plenty of volume in that move, and you can see on the 15-minute price just entered this area of imbalance and then retested. So it came in and bounced, almost bounced straight off. So I'm thinking at some point it's got to go in. It's got to go into here I think certainly within this trading period between 1 and 3 p.m. it's going to go into this area and maybe even past it. But you know, I'm not Mystic Meg, I'm not a predictor, but based on experience and based on all this imbalance, I'm thinking that's what may happen. So again, 5 minutes, still fluctuating around this area, so we'll just hang around, see what happens. Let me just put a little arrow on here. There we go. So this is where we got in the trade. Okay, and it went down and it sort of went back up again. So we're a little bit of profit, but not too much at the moment. We'll just see how far it's going to go. So it's 13.28, and what we're looking at now is the red candle on the 5 minute just starting to go down and just introduce itself back to that imbalance. And what we'll probably find is that imbalance area will become an area where the price will either bounce or break. So it will either bounce back off it and go back up as it did before. So here the price came down, it saw the imbalance area and bounced off. Then it came back down, and then now we're in this situation where it's just about to poke its nose back into the imbalance, and it's either going to do the same thing, it'll bounce off, or it'll break. Okay, and if it breaks, what will probably happen, right, so the price will either, okay, by the time I've messed about my brush, the price has done its thing anyway. So the price is either going to come down, okay, and bounce off and go back up, okay, or it's going to bounce off there and then come down, okay. And I'm thinking what's going to happen is it's going to end up breaking and coming down and taking out more of this imbalance. But again, we've got to be patient, we've got to see, we've got to wait and see what happens. There's no rush, there's no panic. All we'll do, we'll wait for profits to be taken and get out the trade. So there are two things when it comes to trading, two particular days of the week where you need to be a little bit extra cautious. Number one is Monday, particularly Monday morning, and Friday afternoon, when the markets are opening and just waking up, and when the markets are about to go into the weekend and people go home early. So those are the two areas. And as you saw on Friday, we had, not only did we have Friday afternoon, but also we had lots of high impact news, and it made for a really kind of exciting session. So those are the two considerations to take. So price is just about to, again, it's just teasing itself, poking its nose into that imbalance area. 13.32. So in half an hour we've kind of gone through the first part of the imbalance. It's now having a look at the second part of imbalance, and again it will probably test it as it goes along. The price will go along, test it, and suddenly boom, there we go. It's taken a lot more out. And again, that move so quick. It actually went to 12 pips. So this area is 12 pips of profit, but I'm still in my trade. So if you imagine if you're getting into an ice bath, okay, if you've ever done that, or if you've ever gone skinny dipping and you dip your toe in the water and you take it out straight away, and then you dip your toe in again, and then suddenly you put your whole foot in, and then after a few minutes you go, yeah, okay, I'm getting used to this. And then you got to do the same process with the other foot, and eventually we ease ourselves into the cold water, and then we submerge your whole body, and then we get used to it, and then we're happy with it. And this is the same sort of thing as the markets. The market at the moment, as you can see from here, is dipping its toe in the water. It's kind of having a little test. Dip it, no, don't like it. Dip it, no, don't like it. And then suddenly something will happen where it'll go into that area and it'll stay there, and it'll become more comfortable with it. And what were resistance lines then suddenly become support lines, and that's the way, you know, we understand, we read the markets. So just think of it like that. So now the toe's gone in. It went in a bit, the foot went in, oh no, took it out, it's still a bit too cold. Now it's approaching, what's going to happen? Are we going to see it go further down? Toes in, Is the foot going to go in? Still just teasing that area, not quite sure what it wants to do. And again, the area that you're looking at right now, this area here is the imbalance from Friday, and it's looking to take out the imbalance. Well, it is taking out the imbalance. It's got to take out the imbalance. It's got to take this out, okay? But when it takes it out, we're not really sure. So you can see now the way the price is moving, sharp up, sharp down, sharp up, sharp down. And what's happening, we've now got a bit of a fight between the buyers and the sellers. Obviously, you know, we're in for the sell, so it would be nice to see the price come down as it is now. But as I said, you know, it's going to test that area. It's testing this area of imbalance, it then retrace, and then may well come back down, as I said, for a further move to that downside to the south. So we've got 1 minute and 10 seconds left on this time frame. So moving to the downside, that's it. Okay, that's our take profits. In fact, we took 20 odd pips in that move because it's moving so quickly. Usually, well, number one, it's gold because that's the way it moves, and it's Monday as well. So again, quite choppy. One of the things that I could have done there is, you noticed when the price went below his trend line, it came to here and kind of stalled. And in hindsight, it would have been a good idea to get in then, but because I'm more cautious, I like to wait for the next candle to make sure the move is a bit more, just to confirm the move really. So I got in at this level, okay. It then went down. It came back up to almost to break even, and then went down. It actually went down to this point here, but I didn't actually set a take profit. I did it manually, and I wasn't quick enough to get in and get out from there. So what I'll probably do is I'll probably go through a session where I go through MT4. I use MT4. There is MT5. And C Trader is also available, but I'll go through an MT4 and show you how to set these things up, so the price, as soon as it hits, you take profit, then you'll be taking out the trade. But because I'm here sitting at it, I just tend to do it manually, so that's just the way I do it for this particular strategy. I don't recommend you probably do that, but again, went down to here, wasn't quick enough to get out the trade. It went back up to here, and I said it may well come down, and that's exactly what it did. It's now taken quite a lot of this imbalance out, and it's still going further south. We've done pips for the day. We've done 20 pips for today. Let me just check. Yeah, so 21 pips for today. Simply because the move was so quick and still going to the downside. Here we've got the 15 minute, and it's still going south. So what have we done? We came on the charts at 1300. In fact, we came on the charts probably at 1250. Just to have a look and see what was going on. We've got 5, 10, 15, 20, 25, 30, 35, 40 minutes. Yeah, it's now 13:42. We've done our pips. The target is 10 pips. We've done 20 pips, so I've done 2 days profits. So, you know, by rights, I don't really have to trade tomorrow. But of course I'll be here. What we'll do, I'll just stay on till 1400. Just to see how this trade plays out, and just see if my my brush was kind of, you know, at any sort of levels of accuracy, which clearly it did, and we'll just see what the price does. Just the top of the hour, 1400, 2 o'clock GMT, and as you can see, the price has continued to go down to the south, down for the buy, starting to retrace a little bit up here, but we got in the trade here. We got out the trade somewhere around here, and we said that the price would probably meander around this level of imbalance before moving to the downside, and that's what it did. So another successful trade, and again with this strategy we haven't recorded any losses, we haven't had any losses as yet. So what we'll do, we'll come back at 1500, show you what happened with the entire duration of the trading period between 1 and 3 p.m, and we'll come back at 3 o'clock. Okay, it's the end of the session. It's 1500. We've just gone past 1500, and remember what I said at the beginning of the session is that we had areas of imbalance, and the possibility is that the imbalance would have been taken out, and you can see where price has gone. It's got a dramatic move to the downside, and it's taken out pretty much all the gains. So we had the big buy on the Friday, and it's come back down to readdress that balance. So again, a huge push to the downside. As I said, it possibly would. We don't predict things, we just look at the market, and at every different line, remember we said before that this line of imbalance, it could have bounced or broken. So quite honestly, it could have bounced off there and gone back up to the upside, but it didn't. Okay, because we identified these levels of imbalance, and as you can see, this area, let me just put it on the 5 minute so you can see a bit better. So this area here is our 1300 to 1500, and the total move for today, and bearing in mind all we need to do is take 10 pips for our targets. So I got in just about here, and that move to the downside is 217 pips. So again, another winning day of testing the strategy, using the strategy, and again it's just very simple, very simple. 2 lines, draw a box, have a look at the trend, find out those different areas of support and resistance, those imbalance levels, and just remember that wherever you get a line, the price will do 2 things: it'll either bounce or break. And here we go. We've got 217 pips for this target, for this trading day. 217 pips for this trading day, using the Crossfire strategy. So again, if you want to follow along, if you're watching this on YouTube, then you can go and have a look at the playlist. You can go back. This is day 4. Now, day 4 of trading. We've been testing it for day 58, but for the purpose of YouTube, I've just started right from the beginning, and this is day 4 for that. I'll say 217 pips, not to be sniffed at. Crossfire strategy. If you want to get started with this, drop me a comment below, get in touch with me in the usual way, and we'll see where we can help. We'll talk soon.